Hey, it's David here. I'm up here in beautiful Breckenridge, Colorado, up a little over 11,000 feet. Yeah, the air's a little thin. I'm breathing okay, but it's beautiful. It's gorgeous up here. It's a place where I get real clarity. I get a time to think and adjust what I'm doing in my life and to make sure I've got everything positioned the best I can to be doing what I love to do. That's the key in life, is doing what you love to do. I want to have that same thing for you. My quick point of reference today is going to be talking about the cost of living and inflation, because that's a huge factor. Now, if you're currently working in business, a career, your practice, you're able to keep up with the cost of living or the inflationary costs to some degree because you're working and your reimbursements on what you do, trading time for dollars, is for the most part going to keep up, notwithstanding the fact that insurance companies are trying to squeeze down the profit margins and there's a lot of corporate competition. But that being said, typically when you're working, you can keep up. Where people have trouble in their lives is retirees. Now, I never plan on retiring, but whatever your game plan is, when you want to get free from what you're doing, then the question is, how do you make your money that you saved up, that you accumulated for, quote, retirement, how do you keep that working for you? How do you make that produce the cash flow to live the lifestyle that you deserve to have in retirement for all those years you put in all that hard work? How are you going to make that happen? Because you see most financial investment plans, the traditional Wall Street stock market stocks and bond mix, annuities, whatever you're doing, it doesn't provide for cash flow. It provides for accumulation. The game plan is to accumulate. And advisors will tell you need $3 million, $4 million, $5 million. Well, do you? Do you really? Or can you learn how to actually make your money work for you and actually increase in value, increase that capital base, even when you're retired? See, I know you can. I've done it. Many of the people in Freedom Founders have done it, but you've got to be wary of the cost of inflation. So what does that look like? We've had relatively low rates of inflation over the last several decades, relatively low. On average, about 3%. Now, you've got to decide who's providing you those numbers. See, that's the government. Do you believe the government numbers? I certainly don't. I think the cost of living has always been higher than what they report. But let's just use their numbers and say 3%. Well, 3% is still going to have a devastating effect on the cost of living over 10, 20, 30 years. If you start with a certain pile of cash, of money, at a certain point, then that money is going to be decreased in its ability to purchase what your lifestyle, what you need down the road. We know that the cost of healthcare and everything else in this world is going to go up. It's not going to go down. In fact, I think we're going to see high inflation rates. I'll bet you we see 5% plus in the coming years. What does 5% plus do? Well, if you use the rule of 72, which is the compound effect of returns on investment, which says that you take your return on investment and divide that into the number 72, it'll tell you how quickly you can double the compounding effect of your investment. Well, it works the opposite way for inflation. So if I say, let's say we're going to let's use easy numbers for me because I can do the math in my head. Let's say we have a 6% inflation rate on average over so many years. Well, if I take the number 6, divide that into 72, let's see, that comes up to 12. So that means every 12 years, my dollar bill now only buys 50 cents worth of the same goods or services. In other words, the ability for my dollar to purchase has been cut in half at a 6% inflation rate in just let's say 12 years. In 12 years. So if you're planning on a retirement of, let's say, at least 20 years, and most people will probably retire and live 30 years, let's see, how many times does 12 go into that? About 2.5 times. So 2.5 times your dollar's gonna be cut in half 2.5 times over that period of time. Are you gonna be able to keep up with that? So that's where you've got to learn how to invest in real capital assets that have an inflation index hedge that will keep up with the cost of living, just as you were doing when you were working in your practice, trading time for dollars. That's the key, is investing in the right assets. Wall Street, I think it's a casino. It's up one year and it's down the next, up and down. You cannot provide and secure a real retirement lifestyle when you're riding that kind of a roller coaster. You've got to learn how to do it. You've got to take control yourself of your financial future. So keep that in mind. Know that you've got to have a number that you can produce and keep that number working for you past your working years. That's the key. That's what I've done in my life. That's what we're helping many others do in Freedom Founders. Follow us. I'll give you more tips on this. Keep these things in mind. And remember, always stay focused on your freedom. I'll see you next time.